we quickly move on, ladies and gentlemen, to the next exciting presentation of the day on leveraging technology and analytics for credit risk lifecycle management. And to deliver this address, I would like to call on stage with a big round of applause, Mr. Tushar Bhaskar, Chief Sales Officer, Rubix. Can we have a big round of applause for Tushar? Tushar, welcome to the stage. Looking forward to a great session from you.
Well, very good morning to all of you. I think I'm very lucky to be placed third in the slot in the presentation because first panel very well articulated in a manner how data and analytics can actually be used for improving customer experience. But very importantly, they also pointed about a very important aspect of risk management, which is also a very important part of customer experience. And Aniket as well, he spoke about how data infrastructure in terms of the marketplace is improving. I will talk about a very niche area in terms of risk management, how we are leveraging technology and analytics in terms of helping our customers, be it banks, corporate clients, and insurance companies, in leveraging our tools, leveraging our platform to ensure that their risk management practices are in place. So very briefly about our organization. So we started this company in 2018. It's a technology company. We have built a platform called Rubix ARMS, Automated Risk Management and Monitoring System Platform. On this platform, we use 120 plus structured and unstructured data sources to build risk profiles on counterparties. And we work with close to about 350 plus customers. And these customers come from all the industries. I mean, we work with banks, like State Bank of India, Axis Bank, IndusInd, etc. We work with a lot of corporate customers. Corporate customers will include your traditional large top 500 companies, but various unicorns as well. And we also work with insurance companies. Last year we raised our seed fund round where, how do I go back? So we raised our seed round from a venture capital fund called Cactus Venture Partners. And Rubix is operating in the domain of entire credit risk management. So right from onboarding to collection is where we operate in. So you onboard a customer, you need identification, fraud checks, you want to do a risk assessment, you want to monitor that counterparty on an ongoing basis. And if you're unlucky and if the counterparty defaults, you would want to collect from that particular counterparty as well. And that's where we operate. These are our 4 founders. So we have spent about 2 decades in this industry in information space. And we have senior advisors from the industry as well. And these are our few of our customers in the banking domain. Few in the corporate segment as well. But very importantly, I mean, this is where I'll spend my time on. So when we look at credit risk life cycle, what is it? You are onboarding a customer, you are assessing a customer, you're monitoring it, you're collecting. If he's paying, then you're again monitoring and you're collecting. And in case if he defaults, you have to collect money. So in the entire process, you're also going through a activity called data enrichment and augmentation. So you are always enriching data on that customer to ensure that your monitoring, assessment, and collection are in place. So when we talk about onboard, we have identity and fraud solutions, especially related to legal entity identifier, and I'll touch upon this particular aspect as well. We have video KYC solutions, and we have a physical aspect of identity check, which is called site visit solutions. Now, touching upon LEI, why I want to specify an LEI is because RBI actually has made it mandatory on 21st of April 2022 that wherever an entity has an aggregate exposure of 5 crores and above, LEI number is mandatory. So this is something which is very, very important. We as bankers and any sort of a lender, you need to have a LEI number for any of the borrower who has an aggregate exposure of 5 crores and above. But why LEI came into the place? So obviously the origination was global financial crisis. At that particular point of time, a lot of CDOs were being sold, collateralized debt obligations were being sold, packaging in the manner of special purpose vehicle. But nobody knew which bank owned what type of collateralized debt obligation. So hence the entire thing blew up. And in order to address that particular problem, LEI number was introduced, which essentially solves the problem of who owns what and who owns whom. So which company owns which other companies, and which of those companies owns which of those assets. Yeah, I'll go for the next slide. It's not working. Okay. So LEI is a 20-digit number. It basically identifies a legal entity. A legal entity may have 100 locations, but it will have a single identifier. And that is something which makes it unique. So uniqueness comes from the fact of that this is global in nature. Indian entity may have a LEI number, a US entity may have a LEI number, Philippines entity, Chinese entity, all will have an LEI number. So this helps bankers to identify any sort of legal entity across the globe. And this is an open database. So this is managed by Global Legal Entity Identifier Foundation. This is an open database which bankers can access and verify the existence of a particular entity. And legal entity identifier is issued by a local operating unit. So hence all the LEI numbers that are issued globally are verified. So these are verifiable identities. So hence it is very, very important that when RBI has made it mandatory, there is an open source or open database through which bankers can also check the LEI of any particular counterparty. It's not moving here. Yeah. So again, it addresses the problem of who owns who. So which particular company owns which other organization. So ultimate beneficial ownership problem gets solved through LEI. And that's the reason, that's the primary reason why LEI number is being made mandatory for aggregate exposure of 5 crores and above. Now, where does Rubix comes into the picture? So Rubix essentially comes into the picture where we have been appointed as the India's first and sole validation agent for issuing LEI. So we are the validation agent for LEI numbers in India. And there are a lot of memorandum of understanding we are signing with banks and other lending institutions where any bank which needs LEI number for their borrowers, they can reach out to us and we can help them get LEI in a very fast-paced manner. So this is something which is very, very important. And this data is extremely important for bankers to understand the UBO. So again, you should look at the ownership of the entities that you're looking at. The ultimate beneficial ownership, it's a very important compliance requirement. So LEI basically addresses that particular problem for you. Now coming to our other solutions, which is on the credit and the assessment and the monitoring side. So we have built a platform called ARMS, which is Automated Risk Management and Monitoring System. So ARMS basically sources 120 plus data sources, structured and unstructured. It looks at, we have also built estimation models for non-corporate entities, which is a major problem in India, where you do not have any compulsion. Unregistered entities or non-corporate entities do not have any compulsion of sharing data with the Ministry of Corporate Affairs. And this platform also provides you global coverage. So it's not only limited to India. If you would want to look at, from a trade forex perspective, if you would want to look at information on entities outside India, platform can help you understand information on entities outside India as well. On the monitoring side, we have built a early warning system. And I'll also present the use cases to you, which are continuous in nature and which also provides you dynamic scoring to understand the risk profile of the counterparties that you're dealing with. So from a perspective of what you should evaluate is something you can evaluate any counterparty on the platform, whether it is your customer, borrower, dealer, distributor, franchisee, competitor, any sort of counterparty is something which you can evaluate through the platform. You can do a basic KYC check. You can do a detailed due diligence on a particular counterparty. You can also do a quick check on that particular platform. So you have the option of evaluating any type of counterparty. You also have an option of evaluating or doing, deciding on the depth of due diligence of that particular counterparty. Now, one of the problems that we have solved, and I feel very proud of it, is so in all our previous roles, one of the problems that we were grappling with was, how do I evaluate in risk profile of an unregistered entity or a very small enterprise or an SME, right? One way to look at this is, in a consent-based architecture, you can get information from a counterparty and then you can take a call. But I think in the first panel, one of the panelists also mentioned that customers want to give minimum information and want to get maximum benefit, right? So this is where we are actually leveraging our data, we are leveraging our analytics, and building estimation models on these SMEs, especially partnership and proprietorship concerns, which my clients are utilizing to take credit decisions. So ultimately, let's take an example, if a CFO of United Phosphorus, which is one of the largest fertilizer companies in India, they would want to give credit to their small dealer in a rural part of the country. In absence of any information, it is very difficult for them to take that particular decision. But my estimation models enable them to understand the risk profile of that particular entity. And these models can be deployed on-prem as well. So through the estimation models, you will be able to understand how a particular counterparty is behaving. And that is what we have developed here. So we have built this estimation model through various data sources. So one is our own proprietary database of 1.4 million unregistered entities. We have also looked at these unregistered entities are divided into 256 sectors and subsectors. We have also deployed RPA for data aggregation. And again, we are also dependent on some third-party data sources to aggregate this particular information. This is regarding how we have tested our model, so I'll not delve deep into it, but I'll also show you the output, which I think is very important for you to see. So let's say if I get the name and the GST of a particular counterparty, and I'm completely talking about a non-consent. This is not a consent-based architecture. I'm not accessing any GST data here. If I get the name and the GST of a counterparty, this is the output I can deliver to you in terms of the risk profile or a financial profile of a particular company. So I can tell you their size, I can tell you their profit margins, I can also tell you their payment behavior in the market. So there is a combination of data analytics plus market intelligence that we use, and we have backtested these models, which are about 85% accurate currently with the customers that we are working with. And various banks are also, so all our banking customers are also using these models. So now, in another area that we are working with is called sentiment analysis. I think one of the panelists also mentioned about intent recognition, the way I give the feedback. So what we also found during our data analysis and building our analytics model was sentiment analysis about any organization, be it a very large company or even a small dealer, is something which is very useful for us to understand the risk profile of that particular entity. The way a feedback is given about a particular company can also help me understand the risk profile. So for example, I can give you a few examples. If there are a lot of feedbacks about a particular company where employees on websites like Glassdoor, Indeed, Mouthshut, etc., are talking about their salaries getting delayed. Now that's a very good indicator. Now, can I verify it? I will not look at one or two feedbacks, but if there are multiple such feedbacks, I can definitely look at those feedbacks and probably predict that is this, or probably assume that is this company going through some liquidity crunch and hence not paying salary to their employees. Can I corroborate this data with other data points? Yes. So if I look at GST filing, if I look at PF filing, if I get information from these websites where my models basically do this intent recognition and understand in terms of how sentiment is being spoken about on this particular company, I can very well tell that there is a liquidity problem in a particular company. Now, I'm not looking at financials here. I'm just looking at the filing data of GST, PF, and the sentiment which is being spoken about of a particular organization on internet. So a combination of sentiment analysis, a combination of management background, financial performance, filings, quote data, etc., generates a a risk profile of a particular organization. We also look at monitoring of a particular entity. So on monitoring side, we look at early warning signals. So if you look at India, typically for private limited companies, financials are filed once a year, but there are certain high frequency data points that are changing almost sometimes on a real time basis, but also on a monthly or a quarterly basis. So as a CFO or a credit head, what exactly would you be interested in? You would be interested in looking at the risk profile of a counterparty. You would also be interested in understanding the credit utilization of your borrower or a counterparty. But very importantly, after giving a loan or a trade credit, you would also want to monitor the risk score of that particular counterparty. So this is something which is important for a CFO or a credit head in a particular organization. So how do we do it? So these are the high frequency data points that the platform monitors. So there are certain public domain data sources like GST, PF. We have also built integrations with code. So code data is there. We have built a large repository of external ratings. So in case if there is any external rating changes that are happening, on a real-time basis, my customers gets notified. We also do monitoring on the MCA compliance, news, as well as social media. And one of the data elements that we have added for the banking customers is anti-money laundering, financial crime, and adverse media check related to financial crime. So as I said, few of the data points can change any point of time. A court case can come today, tomorrow, you don't know. A rating downgrade can happen today. Few of the data points are changing on a monthly or a quarterly basis. But how does it help the customer? So this is a live example. This is for an automotive company where we evaluate their suppliers, in fact. So how did my automotive client kind of predicted that which of their suppliers will do a production delay, which will ultimately lead to a production disruption? So at the first instance, when you assess a particular customer, usually the practice in the industry is that you do an annual review. And that is called a monitoring. But I mean, fundamentally, that's not monitoring. I mean, monitoring means that if anything significant is changing in a particular counterparty, you should know about it. So at the time of doing a detailed review of a particular customer, we gave a score of 58 out of 100, which was anyways, let's say, more than average risk. But as things were changing in that particular supplier, the score got downgraded every quarter. And by the time, which is the fourth quarter, when the new financials came, we had actually downgraded, a quarter before we had downgraded that company into a high risk category. Now, this is the sort of information a credit head, a CFO, or a procurement head gets on the platform as and when things are changing. So this is extremely important, and monitoring is something which, at least the feedback that we have got from our clients is extremely important for them, and even bankers are now asking for monitoring reports from Rubix. And this is the final piece, though I've, I think, taken most of my time. So we are also present in the area of debt collection and AR management. And this is where we are combining digital plus physical to ensure that we are delivering our services to our customers. From the area of debt collection and AR management, one of the problems in the industry is, especially when you are dealing with very small companies, especially SMEs, whether you are lending to them or you are extending trade credit, they vanish. I mean, if they have to owe money to you and they have an intent of not paying you, they vanish. It's very difficult for you to locate those particular counterparties and initiate recovery proceedings. So this is where we have built product called Skip Trace. Skip Trace from a retail lending perspective is quite popular from a credit bureau perspective. But for a B2B, this is something which is one of its kind. So what we do here is, we just get the information of these absconding or vanished customer from our client, and then we start our own web scraping to identify the digital footprint of that particular individual or an entity or that absconding customer. Yeah. So when we get the digital footprint of that particular counterparty, then we reach out to that particular counterparty through all the data that we have created on that particular counterparty and try to establish that particular contact. Sometimes the counterparty would have changed their mobile numbers. We are able to find new contact information on the counterparty. Sometimes even the same mobile number is functioning. So with the help of creating an entire digital footprint, plus combining my physical strength in terms of reaching out to that particular counterparty through telecall, even physical site visit, enables me to give a updated address of a absconding or a defaulting customer to my client. And this is how it works. So we have done a similar exercise for a unicorn in the country. I'll give you an explanation in terms of how it works. So on the left side, this is the information. That's the information set that I got from my client. Name, mobile number, and the address. That's it. Now this customer has not paid back 10 lakh rupees to my customer. This particular company has not paid back 10 lakh rupees to my customer. And they would want to ensure that they are able to locate this particular counterparty. So when we go about our exercise of combining digital plus physical, so we do entire mapping of the digital footprint of that particular counterparty, and this is the set of information that we get. One, who are the people behind that particular venture? What form of organization was that? Do they have multiple addresses or have they changed addresses? So sometimes what happens is small and medium, especially very, very small business entities, they usually will shut the shop in one lane and they may open the shop in another lane. And it's very difficult for entity to know where they have opened the new shop. So this is where we also send our field intelligence team to ensure that we get multiple addresses on a particular counterparty. And very importantly, we are able to identify multiple contacts of that particular counterparty. So through this, my customer, he gets helped is, he's able to initiate either a normal process of follow-up of getting their money back or initiate legal proceedings. So this is something which is very, very critical for my clients. And we also geotag the location. So it's not only the data that we are giving, we physically go and verify that particular location, and we tell the exact location or a new location where the absconding customer or the defaulting customer is now based. This is something which is very, very beneficial. The ROI for the customer is immense here. And why I'm saying immense is because my success rate in identifying these gumshuda customers is 80%. This is a very high number, I know, but this has been validated by evaluating approximately 15 to 1600 such lost or vanished or absconding customers. So our success rate is 80% in identifying such absconding customers. And this is where the role of analytics, technology, and even physical, I do not want to disregard physical. It's very, very important, a critical area of operations for us, and I think for the industry as well, comes together and is able to provide a lot of value to our clients. So this is how Rubix is adding value, not only from an onboarding side, where a legal entity identifier is extremely important, from a monitoring side, where we are using a lot of structured and unstructured data, ensuring from a monitoring perspective, almost a real-time monitoring of adverse changes that is happening in the counterparties, and even to the level of going to debt recovery, where we are helping our customers in identifying their lost customers. So I will like to close now, and thank you for your patience and time. Thank you.
Thank you, Tushar. So ladies and gentlemen, that was Mr. Tushar Bhaskar, Chief Sales Officer from Rubix. Tushar, thank you for the presentation. I would like to call on stage Mr. Topendra Bhattacharya, Head Digital from RBL Bank, to kindly do the honors. Topendra ji, welcome. Thank you so much. So ladies and gentlemen, that was Tushar Bhaskar, Chief Sales Officer, Rubix, delivering the presentation on leveraging technology and analytics for credit risk lifecycle management. Thank you, Tushar, and thank you, Topendra ji, for doing the honors.